Welcome to everyone. This week video will cover the gold market for the week of February 5th, 2024. If you like this video, don't forget to click on the like button, subscribe and click on the bell to make sure you don't miss any future videos. Before we start, make sure you read carefully the disclaimer. Just as a reminder, to analyze the gold market, I use the GLD ETF. On the monthly chart, the long-term $200 target still valid. Until the GLD ETF cross below his cycle line, which will invalid the target. This target had been triggered in February 2023 at 175, giving a potential profits of $25 or 14%. For more details on the monthly chart, I suggest to watch my previous videos on gold. Now the question is the 20-week cycle low has formed? Everything is in place for the 20-week cycle low formation. Is the last week low is the cycle low or is still to come? We will find out with the lower time frame analyze. Like I mentioned in my previous update, the ideal time for the 20-week cycle low formation was end of January to mid-February. For the past 3 weeks, the GLD ETF found support on his cycle line. This is the first sign of the possible low. From the last 20-week cycle low on October 2023 to the January 15th low, was 15 weeks long. The 20-week cycle average length is 17 weeks long. 15 weeks is a little bit shorter but still a valid possibility. 2 weeks shorter is not impossible. Usually in bull markets, the cycle have tendency to run shorter. Now let's dig into the shorter time frame to see if it's matched the weekly analyze. The success rate for the 20-week cycle is 100%. The 80 days cycle. Definitely, the 193.18 high on December 27th is the 80 days cycle peak. The last 80 days cycle low occurred on December 11th. The present one is expected on February 17th, forming at the same time the 20 weeks low. For the past month, the GLD ETF trade on his cycle line. Confirming this area is a very good support. At that stage of the cycle, technically the market should cross below his cycle line, providing a downside target. This is another sign, the low is very close. On Friday the market crossed slightly below his cycle lines. But this week we need the confirmation of the crossing. Here are the cycle lines and their potential targets, if this week the market confirm the crossing. If the GLD ETF confirm the crossing below his cycle line, and unless the market drop very sharply during the next 2 weeks, there is a high probability the target won't be meet. Because time-wise he won't have enough time. What's next? There is a high probability the market will continue to trade along his cycle line for the next 2 weeks. The success rate is 66%. The 40 days cycle. The last 40 days cycle formed a low on January 17th. From that date until last Friday, February 2nd, 16 days elapsed. 16 days for a 40 days cycle is way too short. About 50% shorter the usually average length of the 40 days cycle. Just as reminder, the average length for the 40 days cycle is 34 days. 34 days bring us to February 20th. For more details about the cycle length, I suggest to watch my series of videos about introduction to cycles. I posted the link in the description below. Now the puzzles start to taking shape. If that analyze is correct, then we need one more 40 days cycle to form the 80 days and the 20 weeks cycle low. The option of the 20 weeks cycle low occurred in January is very unlikely. The reason is, after a 20 weeks cycle low, we can expect a very sharp move up, which we didn't have. Last week, the market crossed slightly below his cycle line. But we need confirmation this week to confirm the signal with cycle lines. Here are the cycle lines for this week and their potential targets if the GLD ETF confirm the crossing. The success rate is 100%. What's next? We can expect the GLD ETF form the 40 days peak this week, then decline to form his 40 days cycle low. The 20 days cycle. On January 29th, the GLD ETF crossed above his cycle line at 187 for a potential upside target at 190 or $2.42 or 1.29% of potential profits. On January 31st, the gold ETF met his target with a high at 190 for a profit of 1.29% in 2 days. The target had been exceeded the next day. This 20-day cycle was expected on February 3rd, the next one on February 20th. The success rate is 94%. The 10 days cycle. The last 10 days cycle low has occurred on January 31st, right on the time target. The next one is expected on February 7th. On January 29th, the GLD ETF crossed above his cycle line at 187 for a potential target at 190.29 for the same target and potential profits than the 20-day cycle. On January 31st, the gold ETF met his target. The success rate is 90%. In conclusion, there is some uncertainty about the 20 weeks low, but there is a high probability we didn't see the low yet. This 20-week cycle low is scheduled between February 17th and 20th. This third week of February is an important time. The Hurst cycles principle is like a puzzle. All the short-term cycles have to be synchronized at their low to form the longer cycles. For more details of how works the cycles, last year I published a series of videos explaining in details the principles of cycles. You will find the links in the description below. Cycles are very powerful and precise about timing the market and have a very high trading success rate. If you need more information about the success rate, on the first update video of this year, I published the success rate table of different markets for the year 2023. This is the end of this week's video. Thank you for following me. Next week, I will publish another market update.